Are you looking for safer and better alternatives to cash for your investments? In the ever-changing landscape of finance, diversification is key. It's not just about having different types of investments, but about having the right types. Today, we'll explore 6 assets that can potentially offer better returns and more security than holding onto cash. First, we'll talk about real estate, a tangible asset that offers steady returns, potential appreciation, and even rental income. Then, we'll touch on gold and other precious metals, historical safe havens during economic downturns. We'll also discuss U.S. Treasury bonds, backed by the full faith and credit of the U.S. government, and high-quality dividend stocks, which offer a steady stream of income. Finally, we'll delve into certificates of deposit, low-risk options with predictable returns, and exchange-traded funds, which provide diversification and lower fees than mutual funds. Excited yet? So let's dive into our first asset, real estate. For a long-term investment strategy, real estate is a top choice. You see, real estate provides a multitude of benefits that make it a compelling asset. One of the prime advantages is the potential for steady returns over time. As you hold on to your property, its value can steadily increase, yielding a handsome profit when you decide to sell. But the benefits don't stop at appreciation. Real estate also offers the opportunity to earn rental income. By renting out your property, you create a consistent stream of income that can significantly enhance your financial stability. However, investing in real estate isn't as simple as buying a property and waiting for the money to roll in. It's crucial to conduct thorough market research and consider the location of your property. After all, a prime location can significantly bolster the value of your investment. Now let's move on to our next asset, gold and precious metals. In times of economic uncertainty, gold and other precious metals shine the brightest. These glittering assets have a way of catching the eye, especially when the economy takes a tumble. But why is that? Well, gold and precious metals like silver, platinum, and palladium have historically been seen as safe havens during economic downturns. They are tangible assets that hold intrinsic value, which can serve as a powerful hedge against both inflation and currency devaluation. Think of them like a financial life vest, helping to keep your wealth afloat when the economic waters get rough. They are independent of any government or financial institution, which makes them less susceptible to the ebbs and flows of the global economy. Remember though, it's not about putting all your eggs in one basket, but rather diversifying your portfolio. So, while these precious metals can provide a measure of financial security, they should be balanced with other assets. Next on our list are Treasury bonds. For a truly safe investment, look no further than United States Treasury bonds. These bonds are essentially loans you give to Uncle Sam, and in return, he promises to pay you back with interest. What makes these bonds a safe bet? Well, they come with the full faith and credit of the U.S. government. That's a guarantee that you'll get your investment back no matter what. Treasury bonds are long-term investments with a maturity of up to 30 years. This makes them an ideal choice for those who want to park their money in a secure place for a long time. The interest you earn is exempt from state and local income taxes, which is another feather in its cap. And the cherry on top? The consistent, reliable source of income they provide. So if you want a safe harbor for your money with a steady return, Treasury bonds could be your ticket. Now let's discuss high-quality dividend stocks. For a steady stream of income, high-quality dividend stocks are a great choice. These are the stocks of companies that consistently pay out a portion of their profits to shareholders in the form of dividends. Now, it's not just any company that can do this. We're talking about stable, established companies that have a solid track record. These are typically businesses that are leaders in their industry, with a history of resilient performance, even during economic downturns. Investing in these high-quality dividend stocks can be a savvy move for investors. Why? Because you're not solely relying on the stock's price appreciation for returns. You're also earning from the dividends these companies pay out. It's like having a regular paycheck, but from your investments. Moreover, these companies' stability often translates to less volatility in their stock prices, making them a safer choice for conservative investors. So, for a steady income and a touch of safety, high-quality dividend stocks are worth considering. Next, we'll talk about certificates of deposit. For a low-risk investment, certificates of deposit are a solid option. Certificates of deposit, or CDs as they are often referred to, are offered by banks and credit unions. They might not be as exciting as other investment opportunities, but they offer a level of security that can be incredibly appealing to many investors. One of the key features of a CD is the fixed interest rate. This means that from the moment you invest, You know the exact return you're going to receive at the end of the term. It's as predictable as the rising sun. CDs offer a variety of term lengths from a few months to several years. The longer the term, the higher the interest rate tends to be. This means you can tailor your investment to meet your individual needs and time frames. It's important to note that, while CDs offer a great level of security, they are not necessarily the best option for quick returns due to their fixed-term nature. Now let's shift gears a bit and talk about exchange-traded funds, or ETFs. These are a bundle of securities like stocks, bonds, or commodities that track specific indexes or sectors. Think of it as a basket filled with a variety of different investments. ETFs are a popular choice for many investors, and for good reason. They offer the chance to diversify your portfolio without having to buy each individual security. This approach can potentially lower your risk and increase your chances for returns. Moreover, ETFs come with lower fees compared to mutual funds, which can eat into your returns over time. Therefore, they are a cost-effective way to tap into a wide range of markets and sectors. In conclusion, both CDs and ETFs offer unique advantages that can help you build a well-rounded portfolio. Certificates of deposit provide predictable returns and security, while ETFs offer diversification and cost-effectiveness. Remember, diversification is key when investing, so don't put all your eggs in one basket. Explore these assets and see which ones fit your investment strategy best.